Hey guys, first of all, thank you for all coming into the free chat day. I try to do them every probably couple months, every 60, 90 days. Give you guys a taste of kind of how a trader goes through his daily progressions. We always start at 9 a.m. We get ready for the market and then it's a go, go, go. So a lot of you guys were asking, some of the rationale or a deeper rationale behind the trades. As you guys know, I trade live, just like I do in the free chat day on screen share and in our Discord room all day. And I'm, posting what I trade. And, we have every single morning a link that goes out, and then, it's game on. So I want to talk, we had a decent day today, and let's go into some of these trades. So like our first two trades of the day, we shorted these cruise lines right off at the bat. So we shorted NCLH at 985 and RCL at 3270. So these are what we call like just quick ORB plays. And what I mean by quick ORB plays is that when you have, like NCLH had new earnings out. So you see here, cruise line swings the first quarter loss, blah, blah, blah. So when you have like a stock that has some kind of fresh news out at the open, what I want to do is take a trade, in the direction of the gap in the overall trend. So you can see like what happened here is like, you gap down like, a couple percent. And right off the bat, like you see like it going consolidating right here on the side. And, we have like a level here right at 985. That's like the low of the first candle. So even before it gets there, a little bit before it gets there, because I want to get in with a good price and just have like minimal risk. So as soon as this thing is about to break down, I short. It's only a $9 stock, so you can get some size into it. And my stop is going to be just right at the VWAP. So I'm really only risking like 15 cents on this thing. And, the goal is hopefully I can get 50 cents or $1. You don't know. Sometimes you get $2. We took a trade in NCLH a couple of weeks ago and it ripped $2, $3 to the downside. So, you have it in your mind of where a stock can potentially go. It's just a matter of being able to time it, properly. So as soon as this thing ripped down, like I already know, like first candle, like this thing is ready to go. And then you can see like, you're getting a sideways consolidation. So that's actually really bearish. And you'll probably get another shred down. And the key is like, you just want to like, once you cover your risk times 2, times 3, you want to start covering. And so I just start scaling out of this, so covered half at 966, covered a quarter at 944, and then I covered a fourth back at 955. So essentially, like I was covering all the way down. Now I should have taken off that last piece into the 920s, but I wanted to give that last quarter just a little bit of room to see if it can keep going down. Once it started to rebound, then, I just get out of it. Why? An opening range play is just meant to be an opening range play. It's usually like something you're going to hold for like 15, 20 minutes. You go in for your quick shred, and then you're good to go. RCL was a very, very similar play. So like if you see kind of what happened down here, the stock gapped down too. See how you got this gap down? And then you got 1 candle, 2 candle, 3 candle. You need, just a little bit of consolidation at the open to get this thing going. So as soon as this thing, I have a level kind of marked out here, that I think, can work like 3260. And I want to try to, I usually like to preempt it by a few, just because if you short right at the breakdown, there's like a lot of people that are hunting for that liquidity. Like for example, if there's like say 3260 is a level. Well, not everybody in the world can short it right at 3260, right? There has to be, for you to short, which is a sell order, there has to be buy orders there for you to get filled. So I like to be in a little bit before. And once again, like my stop is just right at the VWAP. So I'm only risking 25 cents, right? So if I can risk 25 cents, if I can make $1 or $2, that ends up being really good. And this is just about quick trades, looking for areas on a chart where you get like asymmetric reward to risk scenarios. How can I risk a little, 20, 30, 40 cents, if it's this price, to make $1 or $2? And if you repeat and rinse that throughout the day, what starts to happen is, you take a point here, you take 2 points here, you take 2 points here. Before you know, you take 5, 6 trades, you've racked up a lot of points. You end up with a really, really solid day. So it was the same type of deal. As soon as this thing busted down, I was already in. And then it was just a matter of like scaling out of this thing. And it got down to the 3140s. So I was scaling out, I covered half at 31.95, so a little bit under $1. and then it covered a little bit more at 31.65 when it started to kind of rebound. So like it was trending down, and you see how you got this candle down here, and so this looks like a breakdown right here. So how I covered the last half is like, I think that the breakdown is coming, and now it should go to 31. When it broke down here and then it remounted the breakdown spot, I get out, because that's a fake breakdown. So I want to take my position off and just book my profits. And guys, don't worry about like percents and stuff like that. Even if you have a small account and you're doing like say 200 shares, if you can rip $1 and you do it a few times a day, guess what happens? You have yourself a decent day. If you have 200 shares and it's $33 and you're risking 25 cents, you've got a $50 risk. If you can make $1, guess what? You made $200. Now do that 2-3 times a day, and you don't have to have like crazy amounts of capital, and you can kind of nip and tuck your way to a really good day. You know, misnomer is like when people always think like, I got to find that 100% gainer, 50% gainer. It's hard to be consistent like that. Like, you know, those things can happen sometimes, but like it's hard to build a whole strategy off trying to get home runs on some small cap stocks. You know, like I think like if you have like a smaller account, you're starting off, taking nice quick shreds with minimal risk, minimal stress that are like easy to identify is a great way to just build consistency without having to get too ham-hocked on these things. So these are the two cruise line shorts. Now, we had a couple other, you know, I took a trade short at LVGO 37.20. I stopped out at 50 cents. I took a loss on this one. And this was like a simple green to red move. And frankly, I just had it totally wrong. You know, the market looked like it was going to roll over. So this is the gapped up. When it went green to red, this dotted line's green to red. Yeah, I shorted this with the expectation it was going to tank with the market because this thing's been a little bit extended. It reversed on me like right away. So as soon as it rolled back green, I probably should have got out. You know, like I was up like maybe 30 cents on it. So now I don't have to take a profit. As soon as it rolled back green, I probably should have got out, but there was a spread on it. So I was giving it to the VWAP. And then once it hit 58, I just got out. I lost 80 cents, took the loss, no big deal. Now, my mistake on this was not recognizing that the pure momentum on this, you know, later on, like you could see, like it kept going. I should have really been attacking this and try to flip this thing long, especially at this level right here. You know, I could have really got myself a nice, easy trade. But frankly, I was already knee deep in some other stuff. Then we took a trade in these cruise lines on the long side. So we flipped them. So I long CCL 12.10. I sold half at 12.55, sold the rest at 12.23. So this is just like a simple kind of rebound trade where you get this gap down and these things start to reverse, and you've got like a nice easy level that starts to break over here. And I'm waiting for it to kind of go, I'm looking for that red to green move. So I hit this thing at 12.10. My stock goes right up under here, and I'm thinking like maybe I can get this thing into 12.60. And if it breaks over, I can maybe get this thing into the 13s. Popped up to 12.60. I sold off half, took 45 cents on it. So nothing too crazy, but, a decent amount. And then you got this like crazy candle that just came out of nowhere here. So when it rolled back red, this dotted line, I sold out the rest. So I took 45 cents on the first half, 15 cents on the second half. Just stacking them up though, little by little. That's the way, our day goes. Then, I took a trade in TWLO long at 187.50s. This is your classic range break and red to green move. So what I mean by that is, if you see TWLO, this has got a lot of momentum. It had earnings out over here. So this is the stock like you want to keep playing. You can see what happened here, like when we took this. This dotted line here is the red to green mark. And you can see here, like it kept getting rejected by it. Like it came here and then pulled back, popped in, pulled back. And look, see the pattern was too loose here. So it kept trying and then it kept pulling back, kept trying and pulling back. So finally, when that 9 EMA started to curl up and it tightened up, I hit this thing right on the dot. It's just a market order right before it goes red to green. And then you're off to the races. Like you market order this thing, I had a 50-cent stop on this, and now you're off to the races. I sold off half at 189, then sold off a quarter at 194, and I sold off the rest of it at 190, 130. So I took 3 points on it. I left a little bit on the table. Like I got greedy. That last quarter was at 193, and I'm like, God, should I take it off the table here? I'm up like 6 points on it. And I was like, oh, let's see if it keeps going. Maybe it's got room to 200. That's what the lotto shares are for. As soon as I got this red candle, I just dumped it as I figured it's going to pull back to the VWAP, which around noon, like they pull back to the VWAP a lot and then re-ramp. So just like a kind of a simple trade. But you know, took a few points on it. You know, they add up. You know, that's what we do. This is just day trading. How can I find ways to, on a $200 stock, how can I risk 50 cents to make 2 points, to make 3 points? How can I risk 50 cents to make $1.50, $2, 3 points? And those start to add up because that's an asymmetric reward to risk scenario. Now, the last trade I took was JNUG. I longed at 87.62. I sold it at 87.50. So I lost like 10 cents on it. And this was just kind of a simple, I would say, just faux pas. You know, I longed this thing, like you can see this had like big time momentum. It came back and it started around the VWAP. When I got like this green candle here and it started to break the range and it's holding at the VWAP, you know, I longed it and, you know, it popped up here and it started to go and, you know, it's like pushing around here. So I'm just staring at it. And so I end up like, you know, watching this thing right around this level here. I add it with the stop right under the EMAs. And frankly, you know what? It pushed up here to like 88 and then it started to pull back. And I just sold it flat because it was like meandering for a while and I shouldn't have, you know, it didn't really break support. So I took a flat trade when maybe I could have got $1 out of it. I don't think I probably would have, you know, had a huge profit on the trade regardless. You know, I lost 10 cents on it. But the lesson on this one is if the stock is like kind of just holding its 9 EMA, trail your stop under it so that you can like lock in some profit. You know, I think I was maybe a little bit quick with the trigger. I was ready to wrap up my day. I usually don't like to, you know, trade too much in the afternoon. So I was done by noon, you know, took the profits and took off. That's day trading in a nutshell, right? So I hope you guys had fun. You guys are more than welcome to join us in our Discord room. So we have, you know, our free chat channel, of course, but in the day trading room, like these guys are really active. All these traders have been trained by me. I'm trading in front of my guys all the time. You know, we have swing trading, all sorts of stuff for like education in here, and even our day trading chat room. Like when you purchase chat room, you know, you have an accelerated day trading course. It's like 17 classes of some pretty good material that'll get you started with what we do. You know, we do lessons of the day. So there's all these small lessons of the day that are really important. And then we do market recaps. So like after we're done trading, we do market recaps. And then I think the fun part, the best part we do is we do Sunday market huddles, which is a Sunday class for all the day trading members. It's about 2 hours every Sunday. We get ready for the market. I show you how to scan, how to use the software. We go into how I build my lists. Like, what do we do with all this? Like this TC2000, like what do we do with it? So it's just like a TC2000 class almost. And we go through and analyze all the indices. We map out our game plans like in the market, you know, so like, you know, every stock, like every index, like we start like mapping it out, like what are our bullish case, bearish case scenarios. We start looking into what we need to do. And then I run through my scans, like, you know, liquid gainers, top losers, momentum scans, pullback scans, like all the things that we need to do to get ready for the market. So it's pretty cool. It's a great way to just start learning how to understand how to scan, but also just how to prepare. The heavy lifting in trading happens on Sunday. That's always the case. So look forward to having you in the chat room. You guys are more welcome. Join us in the Discord room. And of course, I appreciate you guys showing up for free chat day. That was awesome. Take care.